Good morning and welcome to Dark Gamma's pre-market analysis. I'm Samantha. It is April 1st, 2026, and we are coming in hot this Wednesday morning. The ESP 500 is printing 6,559.7 in pre-market, sitting about 31 points above yesterday's close of 6,528.52. That is a bullish gap of roughly 0.48%. And it puts us right at the upper edge of where things get interesting. The big picture today, bulls are in control early, but the question is whether they can hold it through the session.
Thanks, Samantha. That gap is meaningful because we are now trading well above max pain at 6,520. Markets have a tendency to gravitate back toward max pain as the session develops, so that 39-point spread between current price and max pain is something traders absolutely need to watch. If we see selling pressure mid-morning, that 6,520 level is your first magnet on the downside.
Exactly, Billy. Now let's frame the full expected move for today. Dark Gamma's model is pricing in a range of 6,475.4 on the low end to 6,581.6 on the high end, so a swing of 53.1 points in either direction. We are currently trading right near the top of that range in pre-market, which tells me the options market is already stretched. Any further push higher has limited room before we start breaking outside the expected range.
And that upper boundary near 6,581 is where gamma exposure starts working against the bulls. Market makers would need to sell into strength up there to stay hedged, so we could see a natural ceiling form. Conversely, a flush down towards 6,475 would likely attract strong buying as dealers flip their hedging in the opposite direction. These are your bookend levels for the day.
On the sector side, the leadership story is clear. Consumer discretionary is your top performer, up 1.35%, and that is being driven hard by the Magnificent Seven names. Microsoft is leading the group up 1.14%, Tesla right behind at 1.07%, Amazon at 0.95%, and Nvidia at 0.78%. Even the laggards in that group, Google, Apple, and Meta, are all showing solid green. When the mega caps move together like this, it provides a strong tailwind for the broader index.
The flip side of that coin is energy, which is the weakest sector this morning, down 1.34%. That divergence between consumer discretionary surging and energy dragging tells me this is a risk-on growth favoring tape right now. Investors are rotating toward consumer spending and technology narratives and away from commodities. That rotation dynamic reinforces the bullish gap we opened with, but it also means the rally has a specific character. It's not broad, it's concentrated.
So here is your Dark Gamma game plan for today. Bulls need to defend 6,520, which is max pain, on any dip, lose that level, and momentum shifts quickly. The upside target is 6,581, the top of the expected range, and that is where we would expect resistance to build. Watch consumer discretionary and the mega cap names as your leading indicators for tape direction. If they stay bid, the index holds. If they fade, expect a drift back toward max pain. Stay sharp, stay disciplined, and we will see you at the open. On today's macro calendar, the main event is business inventories delayed report at 10:00 a.m., previous 0.1%. Additionally, 2 Fed speakers are scheduled today.
There are 6 more events during the session. These releases could drive volatility at the S&P 500 open.
Across the board, the Magnificent Seven are flashing green in pre-market, with every name posting gains between roughly 0.5% and just over 1%, a clean, broad-based bid into tech this morning. The overall tone is constructive, suggesting risk appetite is alive heading into the open.
Microsoft is leading the pack, up 1.14%, followed closely by Tesla at 1.07%. Those two are clearly carrying the momentum today. On the laggard end, Meta is the softest of the group at just 0.52%, though even that is still a respectable pre-market move.
It's worth noting that the macro backdrop isn't entirely clean. Goldman flagging no clear catalyst for a 2026 policy rate cut in China adds some uncertainty around global demand, which could weigh on names with heavy Asia exposure like Apple and Nvidia. That may partly explain why those two are sitting closer to the lower end of today's range despite the broader green tape.
Still, with every Magnificent 7 component positive and the spread between the leader and the laggard a tight 0.62 percentage points, this reads more like a measured, confident grind higher than a volatile spike. The tech sector tone into the open looks steady and broadly supported.
Kicking off April with 3 pre-market names, and Conagra Brands leads the session at $7.5 billion in market cap, consumer defensive, with a beta of just 0.13 and an expected move of 5.9%. That unusually wide move for such a low beta defensive name suggests the options market is pricing in real uncertainty around margins and input costs.
Exactly. And that sub 0.2 beta tells you institutions normally treat Conagra as a stability anchor, so 5.9% implied is a meaningful signal to watch. Lamb Weston and MSC Industrials round out the pre-market slate, both smaller caps, with Lamb Weston carrying the wider expected move at 11.8%.
After the close tonight, Penguin Solutions tops the post-market group at $925 million technology sector, beta 1.81 with a 5.7% expected move, so elevated sensitivity to any macro tone shift heading into the print. Bassett Furniture and Nauticus Robotics are the remaining names, both micro-cap with limited broader market impact.
Tomorrow morning, Acuity Brands takes the spotlight at $8.6 billion in market cap, Industrials beta 1.18, and a 3.5% expected move that aligns more closely with its risk profile. Lindsay and Angiodynamics follow in the pre-market, with Angiodynamics carrying the widest relative move at 5.6% given its smaller healthcare footprint.
India shutting down any crude swap talk with Japan removes a potential supply flexibility mechanism that traders were watching, and that could keep energy names under mild pressure at the open today.
Agreed. And layering on top of that, Goldman flagging no clear catalyst for a 2026 rate cut in China is a real headwind for risk appetite, especially in materials and industrials that depend on Chinese demand recovery.
The SP 500 futures are likely to reflect that China overhang most directly, since open interest in energy and materials options has been building around the assumption of easing monetary conditions in Beijing sometime next year.
With gamma exposure skewed to the downside heading into this session, any negative print on Asia's sentiment could accelerate moves, and 0 days to expiration traders will be watching those key support levels very closely at the open.
Let's look at today's IPOs. Going public today, HMH Holding Inc.
An IPO is when a private company sells shares to the public for the first time. These events can be extremely volatile, especially in the first trading sessions.
Check the offer price and the available float. Day one moves can be very wide. Size accordingly and manage risk carefully. Drilling into the strikes closest to spot at 6,559, the 6,475 call stands out with 14,404 contracts and a day-over-day open interest surge of 339%, signaling fresh positioning that could act as a near-term resistance magnet. On the put side, the 6,470 strike is even more dramatic, jumping over 128,000% overnight to 7,727 contracts, which almost certainly reflects brand new hedging demand, just below spot.
That put buildup at 6,470 is essentially a wall of protection being erected roughly 90 points below current price. So dealers absorbing that gamma exposure would lean toward defending that level as intraday support. The asymmetry is notable because put open interest at the two nearest strikes both printed near zero yesterday, meaning today's positioning is entirely fresh and not a rollover.
Combining that with max pain sitting at 6,520, there is a gravitational pull roughly 40 points below spot, and the call resistance at 6,475 being in the money, yet still attracting 339% open interest growth, suggests participants are buying downside protection disguised as deep calls or unwinding upside exposure aggressively. The put-to-call ratio across the nearest expiry on April 2nd reads 1.897, reinforcing a decidedly defensive tone for today's session.
The practical read for today is that 6,470 to 6,475 acts as a clustered support resistance band just below spot, while the lack of meaningful fresh call open interest above 6,559 leaves the upside relatively unconstrained by gamma exposure, meaning any rally above spot faces less dealer friction than a move down toward that freshly built put zone.
Breaking down the key levels for today's open, the ESP 500 is sitting at 6,559.7, which puts us well above the gamma flip level of 6,414.1. That means dealers are in positive gamma territory, which tends to act as a stabilizing force, dampening big intraday swings.
Right. And think of the gamma flip as the line in the sand where dealer hedging behavior flips from calming the market to amplifying moves. Below that level, dealers sell into weakness and buy into strength. Above it, they do the opposite, which is why we tend to see tighter ranges when spot is trading this far above the flip.
The call wall at 6,625 is where the heaviest concentration of 0 days to expiration call open interest sits, and gamma exposure there acts like a ceiling because dealers short those calls are forced to sell the underlying as price approaches that level. On the downside, the put wall at 6,390 creates a floor where dealer buying pressure tends to cushion any sell-off.
With spot pinned roughly in the middle of that range and positive gamma dominant, the setup into the open favors a contained mean reverting session with 6,625 as the upside magnet and 6,390 as the level bulls absolutely want to defend.
Tracking institutional footprints. The dominant liquidity level over the past year is the 6,671 level, above current price, with maximum liquidity concentration over 23 sessions.
These levels represent zones where the highest institutional liquidity has accumulated over the past year, making them key support and resistance areas for S&P 500.
Over the past week, the level with the highest active liquidity is the 6,512 level, below current price, with maximum liquidity concentration over 3 sessions. Recent activity confirms strong institutional interest in this area.
When price approaches these levels, watch the market's reaction closely. These are zones where major players have left a significant liquidity footprint.
This is a new section we're introducing today, Daily Institutional Positioning Tracking. Each morning, we'll scan the options market for large institutional bets and follow them day by day.
Today, there are no new signals to report, but we'll be tracking this daily so you can see how institutional money moves over time.
No institutional contract to highlight today. As we build this daily tracking, you'll start seeing the most interesting positions appear here each morning.
Come back tomorrow. This section grows more valuable as we accumulate days of institutional flow data.
If you want this level of market intelligence every single day, join Dark Gamma right now. Bots working for you, whale levels, real-time institutional positioning, opportunity scanners, and gamma exposure updated by the minute. You also get access to institutional liquidity and options levels for any ticker, ready to drop directly into your TradingView indicator. Exactly where institutions are positioning. No noise, just data. Dark Gamma is the edge that separates winning traders from the rest. The information that moves the market